Determining cost of goods sold is different when a periodic inventory system is used rather than a perpetual system. A company using a perpetual system makes an entry to record cost of goods sold and to reduce inventory every time a sale is made. A company using a periodic system does not determine cost of goods sold until the end of the accounting period. In this video, we will determine the cost of goods sold using a periodic inventory system. A company using a periodic system does not determine cost of goods sold until the end of the period. At the end of the period, the company performs a physical count to determine the ending balance of inventory. It calculates the cost of goods sold by subtracting the ending inventory from the goods available for sale. The goods available for sale is the sum of the beginning inventory plus purchases. Another difference between the two approaches is that the perpetual system directly adjusts the inventory account for any transaction that affects inventory, such as freight cost, purchase returns, and purchase discounts. The periodic system does not do this. Instead, it creates different accounts for purchases, purchase returns, and purchase discounts, as well as freight costs. These various accounts are shown in this slide, which present the calculation of cost of goods sold for PW Audio using the periodic approach. Note that the basic elements from the previous slide are highlighted in blue. The far right column identifies the primary items that make up cost of goods sold. Again, we start with our beginning inventory, which is $36,000. We add our purchases, which are $320,000, to arrive at our cost of goods available for sale. We physically count our inventory, and in this instance, we've identified that our ending inventory is $40,000, which means the difference between the cost of goods available for sale and our ending inventory is the cost of goods sold. In this instance, it's $316,000. The middle column explains the cost of goods purchased. In this case, it's $320,000. And that is found by starting with the purchases of $325,000, subtracting returns and allowances as well as discounts to arrive at net purchases of $307,800. From there, you're going to increase that for the freight in to arrive at the cost of goods purchased, which is $320,000. The left column reports the contra purchase items. In this instance, it's our purchase returns and allowances and discounts, and the total amount is $17,200. When you solve for this learning exercise, please note that not all of these accounts are needed to prepare the cost of goods sold section. The sales revenue, sales returns and allowances, as well as freight out or delivery expense are not included in the cost of goods sold calculations. In addition, in this learning exercise, there are no purchase discounts. The solution to this exercise will be provided in another document.